Kia ora, and welcome to the CoreLogic Property Market Update for Paenga Whawha, April 2023. Property values continue to fall in Aotearoa, with the CoreLogic House Price Index down 1.1% on the latest monthly reading for March. The downward trend was evident across each of our main centres, with the weakness particularly clear in Otepoti, Dunedin, with values down 2% over the month. Over the longer term, there are differences however, with Ototahi, Christchurch, values only 2.9% below the same time last year. But Te Whanganui-a-Tara, Wellington, down 20%. Values across the Tamaki Makaurau region, Auckland, are more than 13% down over the year. However, there is also variation across the supercity, with Rodney values less than 10% down, and both Waitakere and Manukau down by more than 15%. Outside the main centres, Tahuna, Queenstown, continues to stand out, as values are actually 0.9% higher now than a year ago, while Ngā Motu, New Plymouth values also appear more resilient, only 2% down over the same period. At the other end of the scale, both Ahuriri, Napier, and Hiritonga, Hastings are down more than 14%. But it's important to acknowledge it's too soon for any of these falls to be attributed to the devastation of Cyclone Gabrielle in the region. Despite the momentum of the market being firmly in the negative, there are a few signs pointing to the end of the downturn approaching. Firstly, Tamaki Makaurau, Auckland sales volumes, as reported by the city's largest real estate agency, Barfoot & Thompson, noticeably picked up in March, suggesting demand has improved. Alongside this, total advertised supply has weakened, with fewer new listings coming to market than usual. It's still very early days, but this could be the start of a rebalancing between demand and supply, which will slow the downward trend for property values. That could spill over into the general market confidence too, especially if mortgage rates have truly peaked. The other trend to watch for is what's happening over the Tasman. Housing values in Australia rose in March, and while 1 month doesn't make a trend, when combined with improving auction clearance rates and persistently low listings, the settings are there for the trough in values to have been found. This is especially true when you consider the Reserve Bank of Australia's decision to pause their rate hikes, with a cash rate of 3.6%. Increasing speculation that mortgage interest rates have also reached a peak. Now, what happens in Australia won't always traverse the Tasman and play out here too. But market observers will be very interested to see what happens next. Increased confidence in our neighbouring property market could spill over to New Zealand. In contrast, however, Te Pūtea Mātua, the Reserve Bank of New Zealand, have not wavered from their inflation fight and raising the OCR here to 5.25% at the start of April, surprising the market with the 50 basis point lift. Importantly in the commentary though, they stated the expectation that this should keep mortgage rates where they were, rather than flowing through to even higher rates, illustrating the impact of cheaper wholesale funding from the global market pushing rates down. If Te Pūtea Mātua's expectations are fulfilled, then borrowers are already at a point of being able to quantify the worst case when it comes to estimating future mortgage payment burden. While the jump to today's higher rates will still be felt, we've likely moved past the biggest adjustment period, and most mortgage holders appear to have done so without too much trouble. Yes, mortgage arrears have risen, but not to dramatic levels that would spell a concern to our financial stability, which is Te Pūtea Mātua's frequently stated ultimate consideration. Overall, when you also add rising net migration to the mix, high employment, and possibly a return of some investors later in the year, you can start to sense the downturn coming to an end. That said, it's not here just yet. Indeed, plenty of market fundamentals hang in the balance, and for those anticipating the bottom of the market, it's also worth noting there's no expectation of a fresh growth cycle kicking in to any great degree. Affordability remains stretched, and that will keep a lid on demand. So the phase of the market coming out of the downturn is likely to be a long and drawn out one. There are some important releases to keep on the radar, including the next CPI inflation result for Q1 and the next official labour market stats. As per usual, we'll be across them all, so make sure you keep up to date with all the latest property market data and insights via CoreLogic NZ on LinkedIn, Instagram, Twitter or Facebook, and subscribe to the New Zealand Property Market Podcast on all good podcast players. Mā te wā.